Hey, welcome to Patterns and Profits. I'm Tom Gentile, resident pattern trader. If you've ever felt trapped by the emotional roller coaster of news, opinions, and meme-driven hype, well, you're not alone. Here, we focus on patterns, not panic, on profits, not predictions, and based on a proven, repeatable approach that cuts through the noise and helps you trade with confidence. If you want my videos, education, and special reports the moment they're hot off the press, well, then sign up for my newsletter. It's absolutely free. Welcome aboard, and let's get started. All right, everyone, and welcome to Patterns and Profits. I'm Tom Gentile, America's #1 pattern trader, here to help you discover patterns that repeat and profits that add up. You know what else you're going to find out? You're not going to find this information anywhere else. So help me out, like and subscribe to the channel. Hit that notification bell if you want all my videos as soon as they are uploaded. One more thing, this is not investment advice. Past performance is not indicative of future results. All right, let's go ahead and get started. So last week we were talking about the markets pulling back from recent highs. We saw the markets pulling back from recent highs. And today I want to get into the following. I want to talk about the money calendar and what we see coming into Monday. I want to talk about SpaceX, and let's talk about getting ready and also why wait for the stock to begin trading right now. I'm going to discuss that in a moment. You see that screen behind me? That is a chart of UUP. UUP is the double dollar index, and that is the main reason. Okay, the main reason why the markets pulled back last week. So when I look behind me and I see that chart back there hitting close to year highs, it's no wonder the market needed a pullback. The dollar cannot continue to get stronger without affecting the bond market, right? The stock market, commodities like gold, digital commodities like Bitcoin. And so a lot of people thought, oh, it's because people were pulling their money out of the markets to get ready for the Space X IPO, which, by the way, is already oversubscribed. If that's the case, then we should expect the markets to continue to pull back or be shaky at least until after the IPO. Once the IPO comes out, then everyone realizes they're not going to get the kind of stock they think they could get. Then the stock market should go higher because that money should be redeployed back into the market. But I don't think that's it. I think there's just a lot of other underlying indicators that discuss what's going on with these markets and what's happening with them. Let me know what you think. Why do you think the markets pulled back this week? And more importantly, where do you see them going ahead of the SpaceX IPO, which is scheduled to happen either Thursday or Friday this week? It still remains to be seen. Before I get into Money Calendar Monday, before I get into June's winners and losers, before I get into SpaceX again, I want to talk about the news that might shape the markets for this week that you need to know about. All right, got it right up here on the board. So like I said before, last week, we saw the S&P slip about 2%. NASDAQ dropped about 3%. Basically, the weakness in the tech sector had a lot to do with that. And of course, what's going on with the dollar behind me. All right. So to me, I think this is a regular sell-off. There was not a lot of just crowding to the exit door like you typically see, even though we had a big move. We had a big move in the NASDAQ one day last week. I think it was really a fairly normal pullback. All right. Again, interest rate concerns. There's some technology sector volatility in there. I mean, you can't not see it, but I don't see a structural shift happening in the market. But we do have a few events to watch this week that could shake things up a bit more. So first up, Wednesday, the Consumer Price Report CPI, probably the most important release of the week. Better than expected inflation reading could put pressure on stocks and push bond yields higher. And again, that would come off a lot of what we saw last week with the jobs report being a little bit higher than a lot of expectations too. Thursday, June 11th, we got Producer Price Index, the PPI report. This is a key inflation gauge. for both the Fed as well as the broader market. And of course, we got earnings reports. We got a couple of big ones this week. Wednesday, we got Oracle. Investors are going to be paying close attention to Oracle's report. Really further insights into AI adoption is where people are going to be, poking their ear in. Thursday, Adobe is going to report, not just PDF and Office tools. They're a barometer also for AI and AI software space. And this is something that you have to think about as well. So those are the major things that we have happening. And of course, I'll say it again, Thursday, Friday, we see the big Space X IPO coming. All right, so as we enter the second week of June, the money calendar hasn't changed, doesn't change, right? This is, again, a seasonal calendar that shows me of all the thousands of stocks that are out there, folks. What I'm only looking at is the top 1% of all stocks, top 10% of all optional stocks. They have to be in that area to make it on this calendar. The other thing they have to have is they have to have years of data. Years of data. I'm usually looking at 10 or 20 years of back data. So if there's a stock out there that just IPO'd recently, or maybe the SpaceX stock, which is going to be IPOing here soon, this will not be on my calendar for some time. In fact, the least number of years that I look at is 5 years. So I look at 5-year charts, 7-year data, 5-year data, 7-year data, 10-year data, 20-year data, and I mix those together. And what I'm looking for is I'm looking for seasonality on the calendar, the best times based on past history to buy a stock, and the best times on past history to sell a stock. Now, what I do is I also lever up. And what I mean by levering up is I take a look at not only what's going on for the month and not only what's going on for the week, but I'll look beyond the stocks that are out there and I will look at the overall ETFs. So when I look at the ETFs coming into this week, stripping out all the stocks, I see about a 76% number of ETFs that are bullish and about a 24% number of ETFs that are bearish. And that fluctuates really at about a 3 to 1 bullish to bearish ratio going through the entire week, right? Top two that have caught my eye this week that are different than what we've been seeing over and over again coming into summer is I'm seeing XLI on here, all right? I'm also seeing XLV. Now, before I get into what those are, let's just talk about the patterns that we're seeing, right? So these are bullish patterns, and XLI doesn't have a big window of bullish seasonality. What I mean by that is that there's a couple of days here where we see some seasonality between now and about mid-August, and then it disappears. And I'm believing the reason it disappears is because I only like to look at patterns that have worked out in 9 of the last 10 years. So for a couple of days, there's some 9 out of 10s here for XLI. And then after that, it disappears. Maybe it goes 8 out of 10 going forward. But for right now, we see that about a 46-day hold, right? 2.5% average return on this ETF between now and mid-August. You might say, 2.5%, Tom, that's terrible. That's 1% a month, right? It's about 1% a month. And while I agree with you on the initial onset of looking at that, again, I'm an option trader. I'm going to try to figure out how to take those single-digit returns and turn them into double-digit possibilities. All right, so XLI is the first one that I see. XLV is the second one. That is a healthcare ETF. I'll get into what that is as well in a moment. But there's about a 52-day trade that we're seeing between now and about the end of August, as we get into the end of August. Also looks favorable. 10 of the last 10 years, healthcare has moved up during the summertime, starting now. 10 of the last 10 years. And it's moved up an average of 4.32% when you look at the 52 days between now and the end of the pattern. Now, the other thing I notice is that XLV is littered all over the screen, meaning that I see these 90% plus opportunities that happened on XLV last week. I'm seeing them now. probably going to see them this week. We're seeing a lot of blend there. I like that too. So it basically tells me that if you missed today, you didn't miss the pattern. The pattern is a summertime pattern that can happen anytime here, give or take where we are today over the next couple weeks, perhaps. So ETFs, all right, let's talk about these ETFs as well and what are they. So first one I'm looking at is XLI, all right? So this is the industrial grade spider fund. If you notice, the Dow Jones Industrials have really started waking up here the last couple of weeks. And so XLI is an industrial select spider fund, okay? This will give exposure to industrial companies inside the S&P 500, not just the Dow, but the S&P 500. You've got aerospace there, you got defense, machinery, transportation, construction. It's one of those main ETFs that traders use when they want to look at the health of the broader U.S. industrial economy, okay? That's XLI. XLV is exposure to healthcare, all right? Also inside the S&P 500. It's one of the most widely used healthcare ETFs in the U.S. You've got stocks in there like Eli Lilly, Johnson & Johnson, United Healthcare, Merck, and more. And so these are two ETFs, exchange-traded funds. Exchange-traded fund is a fund that has stocks, all right, built within the fund. It offers diversification. It offers you the ability with one stock to get into several different, or one ETF to get into several different stocks within that area. And oh, by the way, these trade options as well. Okay, so it's important to know that these trade options as well. So if you were looking at, for instance, healthcare, and let's take a look at healthcare. So let me pop up the screen, and I'm going to do a quick little duplication. I'm going to pop in here to XLV, and let's take a look at healthcare. This is trades on the New York Stock Exchange. I've got the chart right up here in front of me. Let's blow this up so you can actually see it. There you go. There's that chart. This is about a 1 year, maybe about a 1 year chart. Let's get that. Let's squeeze this in a little bit more so we can actually see the entire year. There's June to June. And last year, XLV was trading down here around 130, got a high of 160. We've seen a pullback. You know, I could throw a number of different indicators on here. Let's just pull this back a little bit more, squeeze it in so I can add some stuff here. One of the indicators that I really like is an indicator called Andrews Pitchfork. Andrews Pitchfork is a trending indicator. And what you do is you would highlight a significant high or low. Maybe we highlight the low back here. That'll be the start. Then I'll take that to a high, click on the high, and then move it back to the most recent low. And that gives you, if you go low to high to low, that gives you uptrends. And you can see here, based on the lows from last May, and I could have used the one in August, but I used the one in May. It's more conservative. I've got the high that happened back at the beginning of 2026 and the lows that occurred here as we entered the last week of April. You can see that that this healthcare sector is back on the run again. So there's an idea that we can use Andrews Pitchfork. I'm also a big fan of volume. I like to see where, if and where there are any volume spikes, because that tells me where trend reversals are likely to happen. I don't see any crazy volume spikes here as well. I could go in and take a look at implied volatility. And if I look at implied volatility, what I'm doing is I'm adding a measurement of where those options are. So you can see options were very highly priced last year. And then they got low priced into the summertime. And again, at the beginning of 2026, they've kind of moved up and down. They're neither extremely high or extremely low right now. That's good too, because that also tells me that there's not a spike in IV that could support a trend change, right? So these are the things that I do when I'm looking out there and looking for, opportunities here with healthcare, all right, as well as others. So that's the first thing I'm going to take a look at as well. How about some bearishness? All right, so we're talking about the summer's winners, and we looked at the summer winners in XLI, which is the industrial, and XLV, which is healthcare. How about some losers? Well, the losers this month seem to be overseas. Seems to be in Germany and in Europe, right? So when I look at bearishness, and this is the information that I pulled right off of the money calendar as well. I'm seeing bearishness in EWG. All right. This means that 9 of the last 10 years, EWG has moved lower between now and August. All right. Also, FEZ, again, same thing. We're seeing the moves that between today going to beginning of September, lower, 9 out of the last 10 years. And then HEDJ, that's also a move between now and the beginning of August. And all of these were not 100%ers, right? And of course, there's no guarantee they're going to be winners shorting these ETFs coming into this year. But history has shown that 9 of the last 10 years, each of these 3 have moved lower starting today. Last time they actually moved higher, well, EWG, it was in 2023, and that was our bear market. When you take a look at FEZ and HEDJ, those were 2020 and 2021 moves where they actually moved against their patterns. Okay, so what are each of these? Let's go ahead and take a look real quick. So let's start with EWG. EWG. You can see right here. That is the Germany ETF, the MSCI Germany ETF. And here it is. And there's what it did last time between June and going into the end of August, dropped a bit. Here we are right now, and we're starting to see a bit of a drop off from some recent moves from 38 all the way up to around 43 and change. So seasonally, this is suggesting that if history repeats itself, we could move lower. All right. Second one we were looking at was FEZ. Here's FEZ, and FEZ again, kind of the same thing. We saw that move lower last year, but look what happened here. We saw, at the beginning of February and March, we saw a pullback from 70 down to 60, back to 67, 68. And here, moving forward, seasonally, FEZ looks like it may pull back. HEDJ, that is the Wisdom Tree hedged equity ETF for Europe. Also seeing moves that we're seeing higher lows and higher highs, but in the recent weeks, we've seen a little bit, or some recent days, a little bit of a pullback. And again, seasonally expected to move lower during the summer. All right. So that's what we see when we kind of put all of this together. And, if I were to kind of summarize this into one area, I see XLV, right? Forget about the losers for a moment. Forget about, what's happened there. But you got, XLV, you've got this summer ETF that's going on with hedges. And I think XLV, first, showing bullishness in the summer, okay? Second thing is that the trend, that seasonal trend puts this somewhere around the end of that trend happening near the end of August. And the third thing I want to mention is that, if you take a look at what's gone on with this bullish trend, all right, and you measure XLV to the overall market, I'm talking about the S&P 500, I'm talking about the Dow Jones Industrial Average, I'm talking about the QQQ. This one isn't as correlated to those as it has before. We've seen XLV move up even in the cases that potentially we could see it moving lower. All right, we could see the markets moving lower. XLV doesn't have to move with the markets. All right, it is one that sometimes moves as a defensive play as well. So great hedge that doesn't always move with the markets. All right, I want to talk about SpaceX. I want to talk about a quick review. I want to talk about Robinhood, but I also want to talk about something you could be doing right now, right? So hang tight with me. Be right back. Hey, welcome to Patterns and Profits. I'm Tom Gentile, resident pattern trader. If you've ever felt trapped by the emotional roller coaster of news, opinions, and meme-driven hype, well, you're not alone. Here, we focus on patterns, not panic, on profits, not predictions, and based on a proven, repeatable approach that cuts through the noise and helps you trade with confidence. If you want my videos, education, special reports the moment they're hot off the press, Well, then sign up for my newsletter. It's absolutely free. Welcome aboard, and let's get started. All right, hey, I'm back. Cheers with my sparkle water. Guys, glad to have you back. If you're just joining me or you came in a little bit late, welcome to patternsandprofits.com. You're going to want to be a member of patternsandprofits.com. It's absolutely free. And the reason why is because I am offering up something to all of you, all right? All of you that are here, whether you've come in and you're already a patternsandprofits.com member, or if you're part of the YouTube community, welcome. You want to become a Patterns and Profits member, and I'll tell you why. Because I have got a list of stocks and ETFs that you're going to want to get your hands on, and you'll hear about that in just the next few minutes. So we've talked about this Space X IPO, and we've talked about getting in early, right? And we've talked about creating income. And this is something that I'm looking at doing. Can't do it now. I can't even do it this week. I got to wait until the end of next week, really getting into that third week of June or after options expiration day, after Juneteenth. That's when I see things really happening there, right? I discussed in an earlier video, I discussed trading signals and how I really need some data. I need some data on those. Okay. I also talked about SPCE, and boy, what a ride that thing's been on. And I talked about avoiding that one. I talked about that being a copycat stock, and you really didn't want to jump in and be a part of that one because it was likely to nosedive just as fast as it came in. And again, guys, I've had a lot of comments on my video, as well as the live streams I've done on the upcoming Space X IPO. But you know what I want to talk about? I want to get into and share with you something that you could look at right now if you want to get a preparation for what's going to happen later this week with SpaceX. Love to hear your comments about this. I've gotten hundreds of comments on this upcoming IPO. And I've got comments here in the live stream as well. Want to say hello to everybody. Welcome to those of you coming in from Ohio, Lakewood Ranch, Florida, and everywhere else that I see in between. Again, if you've got comments, questions, etc., great to jump in and share those. Jim's saying with all the liquidity coming into the markets, SpaceX is not in a major index. Should we expect after the IPO when it does get listed on NASDAQ? I know this, and again, please don't quote me on this because I'm getting a lot of this information the same way you are, all right? And so what I have learned is that SpaceX tried to get some sort of a jump start to get added into the NASDAQ and into the S&P 500, and they failed to do so, so it's going to be some time before they can get into that. I think that's actually great. I was concerned that if they front load this thing in, that there's just going to be this huge FOMO to get into not only SpaceX, but then get into the S&P 500 or get into the NASDAQ immediately. I just think that holding off on that is actually a good thing. All right. And so that's the thing. We did see, we did see also market pull back to free funds to invest in SpaceX. If that's the case, you got to think about this. First of all, the amount of pullback that happened, there is no way all that money can be deployed into SpaceX pre-IPO. All right. It would have to be deployed into SpaceX. The majority of it's going to have to be deployed after the SpaceX IPOs to buy it on the market. And many people will do that, but I think a lot of folks are keen to the idea that there are less than a handful of brokers out there that are going to allow retail investors to get a shot at getting in early. So what does that do? Does that pump up the IPO price higher than normal? It could. I mean, that's a whole big thing of what the roadshow does and all the advertising for it could push it on the higher end of the IPO price. That makes it even better for the company itself. But I also think there's things like this behind me. If you join me a little bit late, that's the first thing I talked about this morning was the U.S. dollar and interest rates are really have a lot to do with the markets pushing lower. Okay. And so those are some things that we can definitely dig into. But what I want to do is a quick review. I want to talk about Robinhood. I want to share with you, those of you who missed the piece I put out on Robinhood before the weekend. I want to just do a little bit of a review there. But I also want to finish up today talking about a couple of different ways you can really look into this and see what's happening as we go into this week, which is going to be an absolute historic week for SpaceX. All right. So we talked about getting in early. First thing I talked about was there are 4 brokers out there that are offering this pre-IPO to their clients. And we were talking about Fidelity. We were talking about Schwab. We were talking about Robinhood. We were talking about SoFi. All right. I have personally, I have accounts with Schwab and I have accounts with Robinhood. And I've already went out there and made interest on both of these that I want some SpaceX stock. Right. But you guys all know my plan. If you did not see my plan, go back and look at some of the videos I've done here just in the last 2 weeks. And it talks, I talk in plain English about what my plan is for SpaceX and what I'm planning on doing if I get the stock and what I plan on doing if I don't get the stock or I don't get anywhere near the subscription that I want to get. Okay. All right. So that is that's the first of 4 brokers. Let's get into Robinhood for a moment, because last week Robinhood announced, there was an announcement that Robinhood was going to have a part of the retail, but there were a lot of folks that were in social media. Let's just call them social mediaites, who said, no, it's not happening. I checked Robinhood. It's not on the Robinhood, their app. It's not on the platform. It never intended on being on the platform until they were ready to launch it. And they put it into what's something called in-flight and launch. In-flight means it's coming. Launched means it's launched. Right? It was not in flight because they are not ready to put it up there, but they put it up there last Thursday evening. And the reason I know is because a little birdie, let's call him my brother-in-law, immediately called and said, the SpaceX IPO is on Robinhood. So again, trust but verify. Verified it. And I put the information out on Friday. Talked about this Robinhood IPO because I went into my Robinhood app on my phone and I logged in. And I'm sharing with you right now exactly what I did. All right, log into Robinhood. Click on IPO Access. When you click on IPO Access, you're going to get this window right here on the phone. And you'll see in-flight and you'll see launched. And when you click on in-flight, the SpaceX IPO is right there. You're going to click on that little square right there. And when you do, it's then going to share with you the current price as far as the IPO listing. Now, I'm going to tell you right now, this price can and is likely to change by the time we get to the actual IPO. The expected IPO date was the 12th. Okay. So that's the 12th. That is expected to be Friday, although I'm also hearing that it could happen on Thursday. Now, from this point, if you're interested, you click on the I'm interested button, and that's going to take you to the next area where you're confirming your eligibility. Eligibility is, first of all, you're not a restricted person. Okay. That means that you're not getting 10% or more of the stock. You've got maybe an inside track on it. There's some information in there to tell whether or not you're a restricted person. There's also a flipping policy, and I imagine all of these brokers probably have a flipping policy, meaning with Robinhood, 30 days. You can't sell it for 30 days or you're restricted for future IPOs. Now, I saw this happen in the past, and I can confirm if you flip this within 30 days, they're going to keep you out of IPOs for a limited time. And of course, you're also confirming that you understand the risks of IPOs and what they call speculative investments. You would click I agree. That's going to move you to this page where what happens is you're literally on the same page, but this pops up. It's almost like a confirmation. Are you sure? And then you're at this point where you want to continue to request shares. When you click on continue, then you get to what they talk about requesting shares and the allocation. Okay, how does the allocation actually work? Well, it will tell you that you may receive a limited number of shares. Requests are filled randomly the morning of the company's IPO. Now, they're talking about, when they say random, that doesn't mean that gold members are going to get precedence over regular members or high accounts are going to get precedence over lower accounts. I don't believe that's something Robinhood wants to do. I think they are going to randomly put this out there depending on who you are and what you're requesting. And at that point, you would then start the request. And then from there, you could put in the number of shares you want to request. You're also going to put in a maximum share price, right? Now, again, this is my opinions only, but I typically don't like to go above the actual IPO price. If I don't get it at the IPO price, then I don't want it. But that, again, that IPO price could change. That's what you're doing there. So you're going to put in number of shares, the requested price, and you can name your price. I typically name my price at the IPO. And then from there, it's going to give you an estimated cost, which is shares times price per share. You would click review, and then you are off and running. Okay. So what about now? What do I mean by that? Well, we're still days away from the IPO actually happening, but what about now? There are space stocks, there are ETFs, and there have definitely been ones, you may not have seen them before now, but they're starting to wake up. They're starting to wake up. And because of that, I've done extensive research on space stocks and space ETFs. There's about a dozen or so that I actually like. That doesn't mean I'm going to go out and buy them all right now. It means that I like them enough to start tracking them. And so what I've done is I put those together. I've actually created a full report. And that full report will be available to all my members at patternsandprofits.com. So if you're not a member of patternsandprofits.com, sign up. It's absolutely free. www.patternsandprofits.com. Now, let's take a look at one of those. And the one I want to look at is ARKX, right? That's the space ETF managed by none other than Cathie Wood. Take a look at it. You can see right here. I'm going to blow this up for you. This is a chart of ARKX. This is a space and defensive ETF. And you can see here, I've put on some interesting things here that if you were with me just a few minutes ago, beginning of the show, I talked about Andrew's pitchfork. So let me break this down for you. There are 4 things you need to be looking at with this particular window. I've got a chart. The chart is in candlestick. That's the red and green. Opens, highs, lows, and closes that you see here. Number 2, I've got volume down below. Interesting volume spike that happened back in February. I'm not sure what happened with that, but it did come close to the lows of the year. All right. Before moving lower, but in the first quarter of the year, we did get a huge volume spike there. That might also be, might come in with either something by the fund manager, or could be a large weighted space stock that may have made a big move for ARKX. But you see also on here, I've got 2 other things. I've got Andrew's pitchfork, which takes us to those higher lows and higher highs, and it actually shoots a trend up. This is the middle of the fork, the lower end of the fork, the upper end of the fork. And as we see, we've kind of pulled them back to the middle end of the fork, or I'm sorry, from the middle end of the fork to the lower end of the fork, shows an uptrend right now. See this red line here? This is options implied volatility, which has gotten really interesting here. And I think this is actually even going to go higher, which it could suggest that a change in the trend might happen. So that's something that I put together. I look at trend. If I don't have data for seasonality on a stock or an ETF, then what I'll do is I'll look at trend and I compare it to volume and I compare it to volatility, right? What do you need for volume? You just need price. You just need the asset itself. What do you need for implied volatility? You need options data. All right, we have all of that. So, when I look at the ARC Space and Defense ETF, I say to myself, well, what if I want to get long this? And I want to do it as simple as possible. What I can do is I can take a look at the call options. And I went out and looked at the call options for July. All right, July has 39 days to expiration as of now. So your July 17th, 2026 call options, stocks trading between 33 and 34. So that's your at-the-money options, called the near-money options, are 33 and 34 calls. Anything below that, 32, 31, 20, those are in the money. That means that the option strike is below the actual stock price. And anything above 34, 35, 36, 37, 38, etc., those are out of the money options. That means the options are away from or above the stock price. So you can also see that based on, look what the 38 calls trading for, all right? On the ask, $1.90. Look what the 30 call is trading for, $6.20 on the ask, right? So you can see that the 30 call is more expensive because it's got more value to it, all right? If the stock's at 34, then it makes sense that the 30 calls, the right to buy the stock at 30, or in this case, the ETF at 30, makes a lot of sense. So let's take a look at two. So here's an example of the July 17th, 34 calls for ARC-X, right? Getting these at the price of $2.42 for every call option, all right? That's good to 100 shares of stock. All right, that means that contracts for 100 shares of stock. So you take 100 times 242, and that means your net debit's going to be $242 plus commissions and exchange fees. All right, those are not in here, but I'm giving you that net number. Net debit, $242 per contract. Now, this is for an at-the-money option, right? There's no value in this. You could buy the stock today for the same price you could buy the calls for. So what good is this? Well, what good is this is that if we see a pop in SpaceX and we see a pop in an ARC-X, which more than likely we'll be getting into we'll be adding the SpaceX IPO to that fund, could see a rise in stock in this ETF. And let's just say, for example, that we get to 39, all right, in the not too distant future. If you have the right to buy it for 34 and it's trading at 39, your option's worth $5. That's a 100% return. But here's the other thing that could happen. The SpaceX stock could drop. The IPO, all right, not only drops, but then ARC-X ETFs, other space stocks could drop along with it. And you would lose. If it was not above 34, you would lose the $2.42, but nothing more, because that's what the call option allows you to do. Here's the worst thing that could happen. This thing stays right where it is. And on July 17th, ARC-X is trading at 34. It hasn't lost money. The ETF hasn't lost money, but you still lose all the money you put into these call options. One other alternative to just simply buying calls, if you want to be a call buyer, is consider going in the money. Here's the July 17th 30 call. Remember, if we're trading at 34, the 30 call, if it's going for $5.35, $4 of that $5.35 is real value. It's called intrinsic value. Because again, remember, if the stock is at 34, the ETF is at 34, and you have the right to buy it for 30, you're buying it $4 below. You have the right to buy it $4 below the price is trading at right now. That's going to be built into the option price. But I want you to take that $4 away. All right? Take the $4 away from $5.35, and you have $1.35 of time value, less than the $2.42. So what you have is you have an option that's more price sensitive, meaning as the stock moves up, the ETF moves up and down, it's going to move more with that ETF, but it's going to be less time sensitive. So if 34 was a sticking number, this would go down to maybe about $4. So you'd lose $1.35 if it moves sideways. Now, the other thing that I got to mention is in order for a 30 call to double in value at $5.35, then ARCX is going to need to be trading somewhere close to $41. Okay, because that's going to be 11. It'd be worth 11. If you paid $5.35 for something that's worth 11, then yes, you've doubled you've doubled that return. Okay, so there we go. That is, when you put everything together, folks, that's where it's very clear. And to summarize this, ARCX, I mean, it appears to be technically bullish. Though the IV is high, that could support potentially a reversal, especially if we see the IV spike. So I'm watching this one as we go into Friday. Options on this ETF, if you haven't noticed by now, as you go out in time, they get illiquid. Right now, nobody's trading these space stocks, these space ETFs. So if SpaceX does one thing, it's putting a target on space stocks, space ETFs, and it might offer some liquidity, if only for a short time. It may offer some liquidity. So we could see volume and we could see open interest get higher on these after the Space X IPO. And last thing I want to mention again is that I have a full report of about a dozen SpaceX or space ETFs and space stocks as part of this full report. You're going to want to take a look at this. All right. It's much more than just the stocks and ETFs I've gathered, but a way of trading them. It's going to be available here real soon at patternsandprofits.com. We're going to be dropping that later this week. So become a member before the drop. It's free. All you have to do is go to www.patternsandprofits.com. That is it for me for today. Thank you all for joining me. Have a great rest of your day, and I will see you again here soon. Bye, everyone.